Hello everyone and welcome back to my YouTube channel. Today we are talking about why CIPC or registering a company with CIPC does not mean that you have a business. All it means when you register a business on CIPC is that you now have a legal entity which is called a Pty Limited. Now Pty Limited does change the structure in how that company would be taxed if it makes money. It creates a separate legal entity in case it gets into trouble legally for some reason and it gets sued if it makes money. And 3, it can create shareholder value for the shareholders of the company if it makes money. So a legal entity is only a business if it makes money. It will be taxed according to its structure if it makes money. It will have separate legal liability if it makes money. It will have shareholder value if it makes money. How does a business make money? First, it needs marketing. You need to get clients. Let's say you reach out to 100 people. You now have 100 leads. Then you get into some conversations with those 100 leads and it gets you 10 sales. Now you can provide them your product or service, whatever it is, and you make money. Yay! Now you've got a business. Now that money needs to go into a bank account. Now it could either go into the company's bank account or it can go into an individual's bank account. Where it goes into will decide, how much tax you would pay. But you can clearly see that this is a business. You have marketing, you have sales, you have something to sell, you have people that's willing to pay for what you're doing, and that goes into a bank account. That's a business. So, the 3 ways a company makes money, the 3 ways it survives. 1, it survives by having clients, by making sales, right? That is cash flow from clients. Then it can survive on the owner's capital or capital and investments by other people, by the partners. So either their own money or other people's money in return for equity or shares in the business. And the 3rd way it makes money or gets cash flow is through loans, either structured through banks or from other people, friends and family, all those type of things. However, note that a bank will not lend you money if you haven't been trading in the business for at least 2 years. Do you know how many companies are dormant? Why? Because they've got no cash flow. So a business makes money. A business has cash flow. Even if a business doesn't make any money, it certainly has capital or it certainly has access to loans. It might not necessarily be immediately getting clients. It must make money to pay tax. It must make money to get into legal trouble. It must make money in order to have shareholder value. If it doesn't make money, if it doesn't make cash flow, the business is dead. There's no business. You can run a business in your own name. Now, last point. CIPC, a CIPC registered company, has the most number of minimum compliance per year. We're looking at annual return submitted via CIPC. Beneficial ownership submitted to CIPC. IT14 submitted to SARS. RP6's provisional tax returns submitted to SARS. Annual financial statements drawn up by the accountant and the income tax return for the director. That is the minimum compliance if a company makes money. So it's going to cost you what? It's going to cost you 175 Rand. Let's say 100 and something for the registration. Some $50 to name reservation, but it's going to cost you almost 17,500 in its first year of trading in accounting fees. So a business must make money. Just because you are registered on CIPC does not mean you've got a business. Cheers.